I now have the pleasure of inviting Janusz Lewandowski, member of the European Parliament, to provide a closing address of the first day of Warsaw Capital Market Summit 2014 conference. I would like to ask you to take the stand. Round of applause.
Good afternoon. This is very kind of you to invite me, probably to see live how so-called founding fathers of a stock exchange are aging. This is well illustrated here. I am always impressed when visiting stock exchange how rich is Polish capital market with human capital of Polish capital market. I remember very few amateur enthusiasts from early 90s, and here is a big change. I was entrusted with a short summary of the first day, but short summary or longer summary implies listening to all the panels. This is not the case. Therefore, I am going to address you in more relaxing manner, bridging this seminar with gala that is coming very soon. You are kind because whatever happened in early 90s, I was recently a member of a body of regulators. What was the matter of regulation was discussed in the previous presentation, but the body of regulators of European Union called College of Commissioners is not very much beloved body in the business community and in the financial community. Modest justification is that I was always for less regulation and not for more regulation. Two of my colleagues who are always for less and not for more have survived and should go for the next college, that is Oettinger from Germany, now surprised with his new dossier that is about digital market. He was responsible for energy. And second is Johannes Hahn, even more surprised with his new mission of enlargement, because there is no enlargement to happen within the next 5 years in the European Union, but this is his next mission. So they survived, and we have right hand of Mr. Juncker, that is Mr. Timmermans from the Netherlands, who is for better regulation. That is a good tendency now in Brussels. But of course, there was a measure of regulations in response to what was seen as a speculative nature of the financial markets in the crisis. This was job of Michel Barnier, French one. I mean, for example, regulations on hedge funds, private equity, credit rating agencies, derivatives, market abuse, and short selling. This was done under the pressure of time, in time of a crisis. But of course, as it was very well illustrated in the previous presentation, main focus of regulation, anti-crisis resistant regulation was on banking for obvious reasons, because this is a major channel of fueling real economy in the European Union. And the idea of what is called banking union was to delink problems of banks from the sovereign debt crisis, because both were closely related in Ireland, in Iceland, via Fortis, via UK banks, not to mention Spanish banks or Cyprus as abuse of power of banks on the small island. This is a job in progress. This is not yet accomplished. This is to be done in the future. Not fully accomplished because, as you probably know, the share of state bonds in portfolios of European banks is growing, not being reduced, but growing, with clear home buyers, for example, in Italy and in Southern Europe, buying the bonds of our own states. And despite all sorts of devices also mentioned, I mean, 1.2 trillion euro of so-called long-term refinancing operation by European Central Bank, there is a credit crunch, really, still in Europe. There are different estimates. We are investing by 15 to 20% less now in Europe than in 2007. And all sorts of precautions reinforcing capital bases of banks are not quite in line with credit action. This is also very clear. So we have this investment gap. Barroso Commission I was a member of is over. This is past. Now Juncker is coming into action with his people, including Elżbieta Bieńkowska from Poland, promising 300 billion of new investment. This is very interesting, what kind of fresh money he is going to propose for Europe. And some perversive tasks, as the man from the city is Englishman, is to regulate city. This is going to be very perversive exercise. And the Frenchman is going to impose financial discipline upon his competitors from France, announcing now that they are going to break the rules of Stability and Growth Pact for some years until 2017. But now back to Warsaw and to your summit. I think the tone of discussion today is a little bit different from it used to be several years ago. I can observe it, partially participating in this summit, and I am living memory of Polish stock exchange since the beginning in 1991. What was always good for the Polish capital market is to protect it against nomenclatura, against the invasion of politics. Tamborski is a special case. This is about recycling. He came from the market when administration not spoiling him back to the market. So he is a special case of recycling. But this was always good in the story of the Polish capital market to be about professionals, professional human capital, and not about nomenclatura. But the glorious time, and I have an illustration of a glorious time from the Financial Times, that is the end of first decade of 21st century. This was this article, this is headline from the Financial Times, is from 2011. Remember 2011? That was the deepest crisis ever. Everybody was about Grexit, about betting on the collapse of the euro as a common currency in Europe. And we can read about Poland. Warsaw as a financial center, strong market, a large local economy, thriving stock market, and reliable regulation make the city attractive to finance. Janusz is reporting from Warsaw. He was a part of this more crowded session at the beginning. So this is like a different planet. And I remember this imperial glorious time. First round was about competition, who is better, Vienna or Warsaw. Of course, indication was clearly for Warsaw. Second round was about consolidation with driving seat here in Warsaw. So even if today's tone is different of discussion over the future of the capital markets in Poland, I think we should be proud of what was achieved throughout the years. I have a recent World Economic Forum ranking. Poland is number 19 as a market, placed number 19th place as the market. Then, as for the development of the financial services, 32. Not bad, because as in the ranking of innovation, we are on the place 72. So this is quite relatively good positioning of Poland regarding the developments of financial markets. But the tone of today's discussion was different. This is also about, as it was in the presentation on Europe, not only about opportunities, this is so much about the problems. Tamborski is back to the roots, to the organic growth, no more imperial ambitions, but this doesn't necessarily mean inward looking. There is a measure of internalization, but rather looking for issuers around our country. Of course, privatization is no longer to be a driving force of the development of Polish capital markets, so the recipes should be corresponding with new reality of a Polish capital market. And so it is 2014 summit. Less romantic, more pragmatic, more modest, but we are on old continent, and old continent has its limits as when we are talking about the expansion of financial and capital markets. This is mainly about credit fueling of a real economy. We are in Poland, 95% of savings of Poles are on banking deposits. So this is not only also encouraging for the development of capital markets. And the world is becoming less predictable. So final sentence, bridging with Gala is taken. This was favorite sentence of Rozłucki, long-standing chairman of the Polish Stock Exchange. We are in a less predictable world. The future is no longer going to be like it used to be. Thank you.
Thank you very much. I would like to warmly thank Janusz Lewandowski for his closing full of energy and good humor address, which marks the end of the first day of our conference. I would like to thank you for your attention and participation in our event. On behalf of the conference organizers, I would once again like to thank all our panelists and the speakers, and the main sponsor, Energa. I would like to invite everyone for more debate tomorrow, and of course the presentations, and we are starting at 9:30 sharp. So see you tomorrow. Good evening, or good, well, anyway, see you tomorrow, and with some of you in the gala. Goodbye.